Welcome back, Market Mastery. Once again, bringing it to you live. My good friend Stock Savvy Shy, just reveling in the glory that is Palantir. We were actually just laughing about how at the Traders Paradise event last year, we were sitting there talking about Palantir in the, I believe it was the low 20s, and about how the runway was about 5x from that point. And as you can see today, I am pleased to announce that target has been achieved, over $100 per share. I'm up, I don't know, now 1,200% on equity, not even options. The options are a whole different animal, but absolutely exploding on earnings. And we are going to dive into that. We're going to start, as always, with a little bit of SPY options to make sure you are tuned up for the week. And with the volatility, I think we're going to experience, I would definitely suggest writing these down or following us on TradingView so that you can get these trades before they explode. And then you have a direct line to the analysis. So let's take a look at the chop that is the SPY today. We're going to go back. We're going to look at the 15-minute chart. Always critical. We have your ranges mapped out for you here with your pivot point in orange. It's going to be a very simple, straightforward analysis because these levels are beautiful. So 600 is that key level. It looks like in after hours, I believe we picked back up. Was it after hours? Picked back up above 600, which means we're starting right at the bottom of this channel, which means we're going to aim for 605 at the open. It's going to be a very simple, straightforward trade. Market's going to open. If we get a support hold here, we're just going to go with the 605 calls and trade those to the upside. Should be a simple, easy, no muss, no fuss trade. Please join the Discord if you want the real-time updates for these, so that way you can get access to the posts and real-time analysis. The bear trade is going to be also very simple. We're going to go 2 or 3 weeks out of expiration. We're going to target on the bull trade, 605. On the bear trade, we're going to look for this to break down at the open, test back up. It's going to test this $600 pivot point. It's going to fail, and we're going to trade the 595 puts down to 593 or so. So that's your bull and bear trade. We're going to be short and sweet today, so we can get into Palantir, Tesla, and some of the other tech names that are exploding. Again, we will be updating these in the Discord live as they're happening, but we give you the 605 calls, the 595 puts, talk through the price action as to when these trades will materialize. I use the 15-minute chart. I wait for confirmation, which means a full candle as open and closed above or below this pivot point, which indicates the direction of the trade. You should only make money from here on out, both up and down. And with that, let's get on over to Palantir. Let's talk earnings. This thing is on an absolute boomstick trajectory. Unbelievable here. I mean, can you believe we're over $100 right now?
I can't believe it's happening this quickly, but my confidence in PLTR has never been, it's never wavered. Like when you see their technology and the scalability of their product, you guys call me Mr. Moat. Like I say moat all the time. There's specific characteristics I look in a company for a moat. Like I'm a thematic investor. I'm not fixated on any lanes. Like you guys might see me as an AI, quantum, robotics investor, but really I'm a thematic investor. I just identify any structural shift that's going to occur that's going to affect multiple industries. AI was the first one. I was like, whoa. I'm 31 years old. So like that was my first real thematic. I was like, this is revolutionary. Dug deeper. There goes PLTR when it was under $10. Everyone was calling it just the black box consulting company that the government uses. Really, that was a lazy narrative of this is too difficult for me to understand. So I'm going to put this in this box and say blah, 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 blah. There was a hidden gem monster that people just weren't willing to take the time to understand. And if AI was going to reach its full potential, like I was really bullish on AI, Palantir would be the first one to kind of capitalize on that because they had a massive data advantage, first mover advantage in that the government uses them, and the government using them was a stamp of approval. Either way, as soon as AIP got launched like 18 months ago, I was like, this is what the inflection point is going to be in Palantir. I knew their government side of their business alone could maybe drive them to $100 billion valuation one day. Their AIP launch into the commercial space, I was like, that's their inflection point that this will be a $1 trillion company. I don't know when, I don't know how quickly. It was going to be a $1 trillion company. It was going to be the operating system of AI. Similar to what Microsoft did in the mid 90s to the enterprises with Outlook, Teams, etc. Like they owned the operating system for enterprises. I was like, Palantir is a lot of what Microsoft was 25 years ago. And you're seeing how much Microsoft just capitalized on that year after year, decade after decade. Like I see that pathway in Palantir. And this earnings report was a blowout. I will say, like, I was leaning towards more on the bear side than bullish side in this print. How can I not? Their valuation is 170 times their earnings. They're growing their top line. They're anticipated to grow their top line 26% in the full year of 2025 with great net income margins, 35%. But like that valuation is significantly up there, especially when you have a name like Snowflake trading at 40 times. It's like, that's crazy. Like they're not just like expensive, they're tiers, multiple tiers ahead of the second most expensive stock in that space. So I was like, I think it's gonna ride on I'm a little worrisome in the near term. They reported dominant numbers, and these weren't just like one-off dominant numbers. Like you saw the US commercial segment is exploding. Like that was the one metric. If you guys are subscribers, like I called out, my eyes will be on the subscriber number. I need to see that maintain their momentum. Went up 64% year over year. That was primarily fueled by larger deals, bigger spend, and expanding AI adoption. Now that people are willing to accept AI as a reality, it's not a sci-fi dream, they're going to go towards the operating system of AI, Palantir. And once you adopt AI or Foundry into your enterprise tech stack, it's a white canvas from there. So it depends on like every size is a different deal. It depends on what the needs of the enterprises are. But either way, once the enterprises see the capabilities of what Palantir has to offer, they want more of it. They just want so much more of it. And you saw that when the company closed 129 deals worth over $1 million. 30 of those deals were worth over $10 million. And the deal value more than doubled year over year. What does that tell me? Exactly what I just referenced. Once they got the taste of the Palantir, they couldn't stop having more. And the way their model works, it's the most scalable product ever is Foundry. And one of the moats I look for in a company is how scalable is their product, how sticky is it to migrate your data out of their ecosystem. Palantir has both of those. So I do think this is not a temporary boost. This is a sign of a structural shift in demand. And you saw it with the guidance of 2025. They legit, the street wanted 26%. Palantir put in 31%. That's not just a slight beat. That's a monstrous guide up. And knowing Palantir's way, they're probably going to come in at 35% of growth next year. And you guys know how much I love Rule 40 score. Palantir just reported a Rule 40 score of 81. 81. Double. Everyone's goal in the software space when they are raising funds at Series B, Series C, their end terminal goal is get a Rule 40 score of 40. And we'll be really happy and it'll be a great spot. That's their terminal goal. Palantir just did 81. Two of them. Unheard of. This is a unicorn company and nobody knows the ceiling of AI yet. Nobody. So when you say valuation is extended at $100, I agree it is extended, but you cannot base Palantir on a traditional metric. The same people who are saying this right now was the same people who said it at $20, at $15. When you're going through these structural revolutionary themes like AI, and you have a massive winner and a first mover advantage, that clearly they have 7 straight quarters or 7 or 8 straight quarters of revenue reacceleration quarter after quarter. That's unheard of. And especially when there's the margin expansion in that process. This is unheard of. And there's no cyclical risk associated with this name. Like Nvidia, everyone's experienced Nvidia's 10x in a matter of like 2 years back in 23, 24. This doesn't have the cyclical risk like an Nvidia does in hardware spend. It's recurring. This Palantir is where AI meets permanence. This is here to stay. So yes, you can poke holes in like Palantir's investment thesis that valuation, fine. Everything else is thriving. And yet at a certain point, you have to ask yourself, when does valuation come to play? It's really difficult when the smartest analysts on the street, they predicted 26% growth in 2025. Palantir just came at 31%. And there's a margin expansion opportunity too when they just report their earnings. Like it's just, you can't, nobody has a thumb of how dominant Palantir is going to be. So will I touch $100? No, I don't need to. I became overweight at this name at $8. That's the beauty of front running those moves. And I'm saying this because volatility is a cost of admission for finding early secular growth theme leaders like a Palantir. You have to be willing to stomach the FUD narrative, stomach the constant feed on Finto, like value, like the jokes, Palantir is so expensive. Look at this, price of sales, price of sales, price of sales. Where were you? You're saying the same shit 3x ago at $30, $20. Like, who looks like the schmuck now? The people who just like kept playing about the valuation on traditional metrics, they missed out on the new operating system of AI that's going to be around for decades.
They always
Don't be
do.
that schmuck.
It's the fundamental junkies that just want to see cash flow and like simple things that like absolutely should you value these metrics, right? When you're trying to determine whether or not you got growth. But I don't know, dude. You and me said it. I think it was like honestly maybe the first time we sat down and we were talking about how like in reality, if you can't, maybe it's not seeing the future, but if you can't paint a version of what the future could be, you're not going to make it. You're not going to get these opportunities. You're not going to be able to capture. I mean, where else? I'll put it on the chart here. You guys show me where else. So we've been talking about this like official call out since $7. We are now up 1,303%. Where else can you see that kind of growth in less than 2 years? You can't. Trick question. So I think for most, it's a matter of like understanding that sometimes it's not everything's going to make sense. You just have to be able to put together enough of the story to hold some conviction. And I think that's what at least I'm most proud of in this name in particular, is that even though many of people, I would say this much, like the Tesla trade, this is the one that I received the most negative feedback on, shit talking on Twitter and on all the other platforms. This is where I think I got it the most, where they're like, this doesn't make any sense. This is how I know you don't know what you're doing. Customer counts are accelerating.
Well, do you guys know, like, this is what I'm going to be very, like, pulling the curtains a bit, very transparent with you guys. I get this nonstop. Doesn't matter my track record, because I found PLTR under $10. I found IonQ under $7. Rock Lab under $5. CrowdStrike at $100. Snowflake's a new one. Nobody wanted that at 120, 130, but you're seeing it. Everyone wants it at $200 now. Like at 180, 190. Everyone's seeing them as like, whoa, they're gonna be a massive winner in AI, blah, blah, blah. When you're early, you're going to look like an idiot. And that path, you're gonna still look like a schmuck. It doesn't matter. You have to ignore that noise. Like you just do. Like this game wasn't set up for people like me, people like Austin, you guys to succeed. It wasn't. When you go against the grain, that's when you really find that outperformance. And Dan Ives, he's one of my favorite analysts on the street. He says it perfectly. You can't see AI in your spreadsheets. When you can't see it in front of you on paper in black and white, it's very easy to dismiss and say, oh, you're just a pumper, just a schmuck. You'll learn one day. You can't see space economy. You can't see quantum. You can't see AI in these spreadsheets. So when you're early, you're going to look like a schmuck. But now that it's played out, the thesis is playing out, they're willing to adopt it more and jump on ship. Like nobody wanted to talk about quantum a year ago. Nobody, not at all. It's a regular segment now in legacy media outlets. It was one of the reasons I went on Charles Main's show, is because I was one of the few that stuck my neck out for quantum. And I know that space pretty well. people now want to hear about quantum. They want to hear about the next frontier. Bill Gates today said he sees practical quantum computing in the next 3 to 5 years. This is the tech guru, Bill Gates, saying this, and he does not stick his neck out. He's not like a showman. He's not a salesman. He's very grounded, and that's what he says. It's going to become a reality, in my opinion. And you're seeing Jensen, people freaked out about Jensen. Oh, 15, 20, 30 years away. Yes, I get. And Jensen Huang, NVIDIA CEO, he's a GOAT. He belongs in the Mount Rushmore of CEOs. Do you not think he's a little worried about the air being deflated from AI and focusing everyone's attention on quantum, the next frontier after AI? I get it. NVIDIA is going to be the cornerstone of quantum computing. I agree. Their CUDA platform will be the virtual environment that a lot of the quantum algorithms are going to be simulated on their GPUs before deploying them on the physical QPUs. It's going to be a very sticky component, NVIDIA is in quantum, but it's going to be nowhere close to the AI dominance they have right now. And I guarantee they had some visibility of what DeepSeek was going to reveal or what China was working on, some visibility of the geopolitical tensions on China, and it's going to hurt the stock. Like, he wanted a little attention back in the stock to juice it up a bit, knowing there's going to be some narrative headwinds coming down the pipeline. That was what was at play a month ago. And you saw quantum stock being destroyed 50, 60% in 2 days. Where are they now? They filled that gap because it was just FUD. But I know a lot of people who got sold out of their position because they trusted good old Jensen, and now they lost down 40, 50% for no reason, on nothing except for one individual saying 2 sentences. Don't be like that. You need that conviction. And if you're not willing to have that conviction, it's okay. This isn't for you to be investing in these growth themes. It's totally fine. There's great ETFs, SPY, QQQ, VU. You can get exposure in the market without finding that next multi-bagger or that micro-specific edge on what's the next mover. Like, that's fine. But if you want to participate in this game, being a growth investor, you need to be able to stomach when someone's telling you something that you disagree with or trying to scare you out of your position. I went on a rant right there, but I just really think it's important because things are going to get bad. There's going to be some narrative that's going to take place on a lot of these favorite stocks. Like Snowflake's a great example. Like, Austin's with me over here. Nobody wanted Snowflake. Nobody at all, except for we were just talking about on the stream on a weekly basis, and people probably started devaluing it a little of what I was saying because I kept saying Snowflake's going to be the next runner. It's going to be the next runner. I'm telling you, Snowflake will be. I've been saying it since 120. I'll say it again at 180. They're going to be the next stock that will go through that massive re-rating that Palantir just went through, from Black Box Consulting Company, operating system of AI, 10x valuation when fundamentals improve, but valuation 10x. Snowflake is going to go from AI is going to cannibalize them as a data warehouse, AI data platform for enterprises, causing, I don't know if it's going to 10x, but I put a $300 price target on Snowflake by 2026, using Palantir as a benchmark valuation. I don't think they'll ever get to trading 170 times free cash flow, but let's just say the market dictates they deserve to be in the same valuation, multiple expansion as Palantir. That's a $600 price target on Snowflake. Isn't that crazy? I've seen crazier.
Yeah, there you go. And I mean, that's why, guys, I hope you realize that what you saw many years ago with GameStop, with AMC, like, that was a monumental shift in the kind of underlying structure of markets, period. There used to be a very firm tether, in my opinion, more so than there ever was in the time that I've been investing. So I'm 34 or so. I mean, I started looking at it like late teens, early 20s, right? So that was like 15 years ago, give or take. So not even pre-2000s, right? But there used to be a more stable market structure in which things were tied to fundamentals in a deeper way. But as he quoted the great Dan Ives, I mean, you're not going to see this in your research, in your spreadsheets, in your projections. You're just not going to see some of these things. So you have to be able to look a layer deeper. And so back to my point of what GameStop and AMC did for all of us is they showed the street that you are not in total control. They're still very much so in control, right? There's effectively a computer juiced up to the New York Stock Exchange, high frequency trading for BlackRock, skimping your orders to make them millions. Like that's happening. That's reality. But when it comes to the long-term thesis on some of these names, realize the power that you have, and also that if you're early, you're going to get a major capitalization that's going to be probably 5 to 10 times what you thought it was going to be. So case in point, we've already traded, we've had 3 options trades on Snowflake. At this point after today, all 3 of them have hit a 600% plus return. And as you can see here, I bought this contract for what? In October, $440, almost 10x my money. It's now worth 3,300. And as we close the next channel, we're going to do the same thing again. So the point is this: you can have this kind of stuff so many different ways. You can have your long equity position, which I also have, and you could have your shorter term but still long-term options trades, which I have, and you can capitalize on these moves that the rest of the market is too scared to. So clear range that we're coming up against here on Snowflake. It's going to be a little bit bumpy, trying to get that escape velocity. As you can see, you got right there, trying to get that escape velocity that's going to help this over $200. But then once you do, I want you guys to just be visual here. Forget why the business matters. Forget everything they're doing. Forget that it's of the future. Forget that there's AI in corporate. Just it doesn't matter. Just look at this in terms of shapes and colors. When we're below this red line, we tend to lean more towards the bottom, right? Yeah, we do. Until we get above the line, but even then, it's like a magnet back to the bottom. What has happened in this upper band here? The magnet now is on the top. So even if you don't know what you're doing, the point is this: if you can see this stuff in terms of shapes and patterns, and then you can put together 2 or 3 clues, hey, this is helping businesses become wildly efficient. They're integrating elements of the future, AI, supercomputing, et cetera. I think this is going to help all of business succeed. I could see this being something that's adopted at broad scale, and I think it's undervalued right now just based on some of the comps in the industry. Then all you have to do is understand that when we are trading above $200, price tends to tilt upwards. So either way, even if it's like, man, I missed this off the bottom when you guys were talking about it at 109. Well, wait till we get over 205. There's an easy position trade. I'm buying my shares here. I'm stopping out below the pivot point, and I can capture 200%, 100% upside. You don't always miss it. So we're talking about a lot of these names and getting in early. I think that's the point, because now when someone else is taking this trade at 200, I'm already up 100%. As he said with Palantir, I'm not worried about my exposure because I've already gotten my money back and then some, and I still have a sizable position left. What started for me as $2,400 is now worth $24,000. I'm just going to let it ride. Those 270 shares, I'm just letting them ride. I don't give a shit. I don't care what happens. It's I don't know. It's unbelievable, man. This 10K elite, so Nvidia was another one. We were buying this back in August, so it was at $14-15 back in 2022. That's when we took the long, and the last time we bought, I believe, was 95, 96. And Chai, you were very vocal about that, buying those dips on Nvidia, swinging them up. So like, the opportunities have been there. Now, where are we now? I'm not buying shit here. That's all I'm telling you.
Oh, my level, I said once it violated, I think it was 122. I was like, all right, stage. It's the first time in over 2 years it retested 200-day moving average or 40-week estimate, whatever you want to call it. There's 4 stages of a chart, tech chart. Stage 1, 2, 3, 4, blah, blah, blah. Stage 2 is where you make the most money. Stage 4 is when you lose the most money. Stage 4 gets initiated when you violate the 40-week SMA. That was at 122. First time we retested that level, it violated it. I'm not saying it's going to go down, but I know a lot of people who exit positions once that occurs because the risk and reward is not in your favor once it does that. So now that I'm seeing like it didn't even recover, it's actually holding pretty well underneath it. I'm like, oof, this is a little worrisome. However, I do think there's a lot of catalysts that are driving this narrative on this name. So maybe it's overlived. The key level I'm watching is their anchored average VWAP from the January 2024 breakouts. That level bounced two times perfectly. April 2024 and the yen carry trade crisis in August 2024. Both times overreaction dips, it balanced at that key level. That level right now is at 102, 103. So I think $100 to 105, that's an interesting range for me to participate in a trade because I do think their earnings will be dominant. I don't think the DeepSeek playbook reveal will affect Nvidia in ways that a lot of the markets are thinking it will. It's not a hardware company anymore. It's the ecosystem. The CUDA platform cemented themselves into permanence. So I don't think they're going to have that playbook narrative issue. However, China hasn't retaliated yet on the tariffs, on what Trump did. But I also I want to get back to this point of it's okay to be not own a stock, but also still be bullish. And what do I mean by that? I think like if you sell Nvidia, it isn't about losing faith in its future. Like I do think Nvidia's dominance is unshakable. They will be the kingpin of the new digital economy. But infrastructure, which is essentially what Nvidia is, if you exclude CUDA, but the infrastructure, no matter how indispensable, isn't where the significant growth emerges from any era. It's always like .com era. What was the initial focus on the infrastructures? Cisco, IBM, Verizon, AT&T. These firms were laying down the groundwork of the structural arteries of connectivity. But they weren't the crown jewels. What were the crown jewels? Amazon, Google, the applications that were built on top of this groundwork of connectivity. The same thing is going to occur on the AI era. Like the crown jewels will be the applications being built on top of all the hardware server compute that's been forming for AI. So like the next chapter of AI will be written by those daring enough, like myself, maybe you guys, to imagine what's possible at that destination, not just the road to get there. So I think the risk on appetite right now is for software. It is because we're seeing it in front of our eyes. Software is benefiting from AI right now, and there's no cyclical risk. There's no geopolitical tension like in hardware. There's not that much China revenue in all these software names. It's almost like a safe haven exposure to AI that's just getting started. It's where semiconductors were in 2023 is where software is right now. And what's the risk? Like, why do you want to hold in all these semiconductor names when they've gone up so much in the past couple of years? You go where the next alpha is, and that's software. So that's why like Nvidia is a great company. I'm not saying it's not. It's just it's noisy now. It's a very noisy stock. What comes with noise becomes uncertainty of what the pathway is going forward, and then results in a narrative issue. And narrative issues take time to phase out. Just look at TMDX. And just look at Snowflake. Snowflake all year had a narrative issue of AI being cannibalizing them. And it took 3 earnings reports for them to buck that change. Like it takes 6 to 12 months for a narrative change to happen in a stock. So like Nvidia is kind of going through a narrative change. I'm sorry, but they are. I think the market's wrong, but there's a narrative issue with the stock, and it's going to take some time to phase out. It just will.
You brought up something that's super interesting that I hope everyone can like sit down with and realize is that when you think about how large institutions work, you guys, it takes months and months for decisions to be made because they got to pull all these levers to do it, right? So stock gets re-rated and they want to buy. It's not as simple as just going in and buying it now. I think everybody's wrong. I'm going to do it. There's compliance, there's ops paperwork, there's so much stuff that has to be done in that process that it could take 2 months. And by the time they start building their position anyway, if they're accumulating large portions, it's going to take more time. You guys can get the information immediately, buy your stock that day, and just sit and watch the ride. So as he was just talking about moving into where the alpha is and where the opportunity lies, you guys can do that on a dime, whereas large institutions can't. And I hope that you guys can see that that's actually your advantage, not your weakness. Be flexible. and pay attention. It's pretty much it. I mean, shit, Amazon. Do you know how much shit I got on Reddit? I kept saying Amazon's going to hit 240 by the end of the year. Okay, I was off by a month. Sorry, but absolutely crushed it. Like they were sending young Zach death threats, I believe, because he was posting it on the account saying how stupid it was. Amazon 240 by end of year. Granted, it was a month late, but still, we're pushing 240. I think Amazon still, dude, if you zoom out this weekly, I think there's still room on this. It doesn't make any sense, but given the nature of everything, like when do they tie in their story? Because that's what I've been waiting on. Is when's Jeff going to come on in and say, I want in on this. I like the taste of this.
Jeff's all about space. I don't think he cares about Earth anymore.
Really?
He's all about that space and his babe.
Space life.
But I will say, like, here, put my I wrote about this in the newsletter I have, so put that up on here. I want to mention this because I've been I'm a buy and hold kind guy. I am. I'm a long-term investor, 5+ year out vision. I'm being very agile with selling positions and adding new positions. I really am, because we're entering this environment where new information is happening so quickly. It's making me change my belief because of the new information of what I used to believe in to what is not the case anymore. The playbook reveal that got released, I think it's 2 weeks ago, that was a game changer, in my opinion. On not just like I'm ignoring the cost of how much it costs. Like, I think that's a complete lie, but the actual tech behind it, the technology that they revealed was a game changer. And it made me sell one of my positions, a 4% position that I thought was going to be a long-term holding. Like, I thought it was just going to be like a beach stock, sit back and relax. I thought it was going to be one of those. That the thesis got broken, in my opinion, with that playbook reveal. And it made me buy new stock that was like, this is going to be uber bullish for this new stock. And now this new stock is up 32% in 2 weeks. This is how and the one I sold is red. This is what I'm talking about. You need to be agile. I wrote about that new stock I bought in the newsletter that's over here, but like, I'm telling you, you have to be. I'm bullish on Snowflake right now, but something could get revealed in 6 months. Broke my thesis. Like, you can't be hard-headed in this day and age. You just can't. There's too much new information out there, too much innovating. There's an arms race that's occurring right now in AI. You don't know what the outcomes of the arms race is going to be. This is East versus West. East could offer something that's going to change the complexion of the West. And you have to be agile. Like, you just do. And I got shit for like selling that position, I think, a couple weeks ago, because like, I'm a preacher of buy and hold long term, but like, I'm very communicative with my subscribers. Like, and like, it broke. I'm sorry. I think it's broken. This is why I learned this new information, caused me to do this, and I'm buying this because of it. That's the new environment we're in. You need to be just as agile, in my opinion.
I couldn't agree more, man. I think that's what makes this gold. Is like, we're in an information era. It doesn't mean we're in a quality information era in which everyone has so much information that they almost become inundated with said information to where they don't know what to do. And there's a lot of dog shit out there, but you scan that link right there on the screen, Crypto Donkey, get in there, get access to it today, get it now while it's hot. That's all I'm going to tell you. So you don't want to miss the shift. It I don't know, crushes me that people sleep on this and then don't get access to the one thing that could have prevented the loss in the first place. You guys got to be agile. You got to jump on it. I want to quickly touch on this one because we've gotten a lot of questions. As we told you, I'm look, above 55, it's an easy peasy. And you got the best entry in the business. You're welcome. We were watching 62 as the place to add from a technical standpoint, and it hit perfectly. I got my buys all the way in down to about 59, I think was the lowest fill. Ripped right back up, trading at 70. Look at that volume. That's all you really want to see. Is anytime you see a change in momentum or a change in direction, The only way you're going to get a reversal of that momentum is if the volume is there and it can overwhelm. That's what I think you're looking at right here, right now. Now, I do want to see this above 80 before I'm like confident, slapping the table, excited as can be. But I think that's it.
Bless you. Yeah, TMDX. I mean, what I just mentioned about narrative change on the stock takes time to phase out. There's a narrative change in the stock. I disagree with it. You guys heard my spiel on it. I'm not going to keep saying it on the stream, but I disagree. But guess what I did? Being agile, it's a 4% position for me now. I even though I'm bullish on long term, I have to be. Software is where you want to be this year. It's going to be a sprint. And when I think TMDX is going to take 6 to 12 months to like change that narrative. And even then, like I'm banking on a stock it's kind of outside my wheelhouse. Like I'm a tech guy. This is med devices. Like I see the thesis, see it playing out. Could I be wrong? I could be wrong, guys. I could be, but I don't think I am, and I'm not going to sell the position, but it's not going to be a top 5 position for me anymore. I need more. I need to see them prove that I'm right. And right now, I need more earnings reports to prove that. Like I see the flight data every month, guys. Like I see it. It's my thesis is accurate, but there's a massive disconnect between what management is saying and what the other side is saying. And it's like it's so far apart that something is fishy. I really think it's this side, the short side. But like, if I'm so bullish on, I've been waiting years for software to have their time in spotlight. Years, because you guys know I front run my moves. I front ran software like 2 years ago. Got lucky with Palantir and CrowdStrike, but the rest of my software names, they're now starting to come to play. I'm not. I'm pushing my chips towards it right now, and that's why I wanted Snowflake at 165. It didn't get there. I want Cloudflare at a 5-7% position. This is the AWS of the new internet. Now it's running hard because people are realizing that it doesn't matter valuation. Like Amazon, people are violently mispricing Amazon. They just are. They are essentially giving you the e-commerce side of the business for free at $200. You're essentially just paying for their AWS, the king of compute. AI is just getting started. Compute's going to be on fire, continuing to be on fire. And they're not even factoring the physical AI or the robotics angle on Amazon, where they're quietly leading logistic robotics with like 700,000 to 800,000 robots in their warehouses right now. You don't think that's going to be a margin expansion opportunity on the e-commerce side of the business? It's going to be a game. It's going to flip a 180 upside down. You're paying these robots $3 an hour versus an FTE, which is $15 to $25 an hour. 15 is very, very generous. I think it's more $20. It's a game changer on the expense side of their business. People are mispricing Amazon. It's a $300 stock, in my opinion. I'm adding significantly more if it hits $200. I'm like waiting for it. And the reason I think that might happen this week, I don't hope it doesn't, but the reason for that is Azure numbers were really weak. It doesn't make sense. They're investing $100 billion a year in AI, but their cloud AI workloads were weak on the Azure. That was their miss. I don't know if that's an Azure issue or cloud is just weak in general. We're going to find out tomorrow on Google. We're going to find out on Amazon Thursday. But the reason I didn't want to front run these moves on Amazon is because like I don't know if it's an Azure issue or just a cloud in general issue. And when I'm uncertainty, there's noise. Stay on the sidelines. Don't
wait. There it is. Wait. And I couldn't agree more. I'd love to get a $1.90 on Amazon. I think it's possible. Tapering volume, price action strong. So that means that there's enough confidence that some are willing to front run a move, but also there's not enough that the market's willing to take it. So it's a few bold voices that are going to win or lose in that exchange. Keep that at the top of your list. Tesla, will the tariffs and supply chain constraints hurt the automotive side of their business? This is the question I feel like that's been plaguing Tesla right now. I think so. Let me ask you this. Which do you think is more impactful here? The earnings or potentiality of tariffs?
Oh, earnings, because tariffs. He has the Trump in his pocket, so like tariffs is something that Trump actually can control. Earnings, he can't control consumer demand. Like I will say, consumers are souring on buying Teslas. That's fine. You're reading between the lines of what Elon's saying on the conference call. Again, you guys, I create this verbiage for C-suite a lot in my career. He's sacrificing the EV business. He is. He could give a rat's ass about it. He could care less. He's sacrificing for that because he sees how transformative autonomy is going to be for their business. So he's willing to like this gravy train of like high market share, high floor. Like he care less of his what he's going to say politically on X or Trump or whatever it might be. He's sacrificing that limb, the Tesla limb, in order to have this side of their business flourish with deregulations, accelerated adoption due to something that Trump's going to do. And then don't count on Optimus. Physical AI, you heard from Jensen a couple weeks ago. That's the next derivative of AI, and it's going to be around the corner. He said the ChatGPT moment is almost here for robotics. Jensen said that. Tesla's going to capitalize the most off of that through Optimus. They're tackling real world AI through autonomy and Optimus. It's a game changer. The ceiling is so massive. I can't even tell you like what their like fundamentals look cheap, like really expensive right now. Fine, you're using EV metrics to dictate a software and AI company. It's not apples to apples. Like it isn't.
No,
I'm sorry, it just isn't. And there's just like
in X amount of years when every single car that you get in is now manufactured by Tesla is irrelevant to me, but driven by Tesla is relevant to me. When I feel like every single car you get in is going to, in some way, shape, or form, have purchased or have a partnership with Tesla and or Google Earth to navigate. What do you do then? Which really begs the question for Uber. I mean, unless they're just going to become an asset-heavy business in which they purchase leased or they, well, I guess they lease assets. That could be another big farce. I could see that tipping the entire demand structure down, where a company like Uber has to just make all these investments into actual vehicles, which makes them no longer Uber. Because what's the beauty of Uber? It's fucking software that you carry all the weight for and you take all the risk on. It's genius, right? Evil, but genius. What do they do when autonomous driving is commonplace? Where do they go? You know what I'm saying? So whole different thesis on short Uber, but nevertheless, the long Tesla argument is, at a certain point when every car you get in is driven by Tesla in some way, shape, or form. It's just undeniable at that point.
Yeah, we're not even talking about the industrial component of it either.
No,
industrial,
totally
that's
different.
just like
it's Palantir 2.0. The government will be their main source of revenue at a certain point in time, and I think that's kind of what they're laying the groundwork for at this present moment. Is for the finally adopting some sort of bureaucratic intersection, whereas I think they were pretty weak on before. I mean, they were the anti-hero before this. Like with the Biden administration, they're persona non grata. So I think that they have to develop those ties now, because how long is it before Tesla starts getting, defense? I mean, that's kind of the thing I see with this, with the FSD and the autonomous driving stuff. It's like you got defense tech, you got just consumer commercial, you got industrial, like it hits every box to where basically the government money is just going to be in it. Just turn it on, turn it off. Eventually you don't turn it off. It's just how much are we flowing out now?
Yeah, seriously.
It's going to be stupid. It'll go to 1,000. They'll forward split again. And we'll do this whole song and dance again. Don't you think? I mean, it might be a decade, you guys, just FYI, but this will go to 1,000. We'll forward split. We'll do this dance again. Let the retail get in at 100 a share, whatever. But now you have 10. That's the beauty. And then it appreciates again. I would encourage some of you to go back and there are certain websites you could look like, hey, if I had $10 in Johnson & Johnson 80 years ago, what would that be worth now? And if you look at the history of companies that forward split and then also merge and acquire new companies and they issue new stock, that's where you get rich, guys. Shit, Nvidia made me six figures just because I owned enough that when they split, it paid off.
So, I mean, again, volatility is a cost of admission when you're early. It's also different for Austin and I because we became overweight at 180. Like it's still 2x for us at Tesla's. Like we're okay for chilling between $300 to $400, or 350 or 450 for like 2 years, 3 years. It's fine because we made 100. We're up 100% on it, and
Yeah,
like Mike,
no sweat.
it's
The only
no
one I'm
sweat.
so
I think
disappointed in that I was right on was Baba, dude. I was right, and I just I pooned out, dude. I just
look,
made it just sucks, dude. I
if
mean, I was
if
buying the
historical
dude.
is ever
I know, but everyone's such. I fought so much for that too. I'm talking. We were still buying because I was too early, and we were still buying 65, and I kept saying, "Look, I'll buy this down to 62." Just doesn't make sense. And then we popped, and I panicked, and I was like, you know what? This is too much in this market. China's just not getting any love, and now the volume comes in, and this thing just starts curling like a sweet little vixen, telling me, "Hey, I'm ready for more upside, Papa." And I had a huge position, dude. I had like 60 grand in this. I would have made a fucking killing.
oh my god,
Killing.
we'll see. We'll see. Maybe you would have made killing now, but I
I'm
promise
saying I'd be
you'll,
up.
you'll get another chance.
I'd be up 35 grand right now, which is why I'm disappointed.
Yeah.
Not the later. I'm talking about the right now.
Yeah.
But there's a lesson for you. Was I over allocated? Absolutely. What did I do because I was over allocated? I made a stupid decision. Am I regretting that decision? Yes. But you live and you learn. So, you guys, quick last kind of thoughts. I know we didn't get into smash or pass and all that, but today we needed to talk Palantir. We need to talk about some of these names I get questions about every day. See, Rick, Rick is another case in point. This is how I ended up with 1,000 shares of Nvidia. The forward splits are a gold mine. So the goal is to find those companies that have that insane growth trajectory and can scale at an infinite pace and buy those good names, hold those good names. I mean, shit, with all the ones we put out, it's like hitting me now in hindsight between this, IonQ, Tesla, all of them. You could have realistically, say you put in, like I have my $1,000. That's what I have to put in this. I put in this name, could have pulled out that 1,000 and still had, $250, $300 worth of a position, zero risk on the table. That would now be a 10x. Unbelievable. Rocket Lab holding up insanely strong. Someone was asking me on Discord when do you feel like this will break down? I don't. I mean, I think if this stays north of $25, it's going to stay north of $25. IonQ has even more strength, 41 and plus. Everyone was seeing this big candle and getting panicked. If these buyers get washed out, that's your new demand. That's the only moment in which I'd worry. But again, if you're up enough, it shouldn't matter. This is not one I don't have my stop in place just because I've sold a little bit on the way up, more than enough that I'm happy holding it. And then the last one that I would say kind of goes on the balance of tech and everything else is Robinhood, which we gave you below $9. So you're welcome. Once again, it's at 50. You've almost, what is that now? 400 or 500%. This one has insane liquidity up to 84. So everybody who shorted it then is going to start buying it now. Be
And
smart.
also, one last thing I want to call out is like the reason they're holding steady. They went through a re-rating, guys. This is not the same stock. Rock Lab's not the same stock at $4 or $5. Like the market view them in a different lens. That's what I'm referencing on what a re-rating means. They weren't willing to take the risk at Rock Lab at $4 because it looked like another space SPAC, and nobody wanted that SPAC stench. They couldn't tell the difference between this and all the other space SPACs. That explosive candles, that's because the market re-rated them and see them as a space logistics company in the future. The FedEx of space. That's why it has holding power, because now the market views them in a different goggles and they're willing to bid it up. That's why re-ratings are so impactful on any multi-backer, and that's why it's part of the front running because I'm buying some clothes at Ross when really it could be being sold at Gucci. But now the market is pricing them as it's a Gucci product. Like I bought it at Ross. I saw it at Ross, knowing the high quality of it. But now the market's like, oh, it belongs to Gucci, actually. We're going to advertise it on Gucci. And that's why the pricing power is there in Gucci stores. It's never going to get that low it belongs in that store now.
Yeah, it's the
Rock
lady.
belongs.
It just happened. That lady bought a Van Gogh. An official is actually a Van Gogh at a fucking Goodwill for like $40. That Van Gogh is, I would argue, priceless, but she's going to fetch millions if she sells it. So she bought it at Goodwill, just decorating her kitchen for $40. It's a Van Gogh. She now has millions. Buy the Van Gogh. But the only way you get that opportunity is if you have a creative and curious eye and you're shopping at Goodwill. Find the Goodwill buys. All you have to do is show up here once a week. It's that simple. My God, who would have known? All right, this is a late start. Quick announcement. From this point forward, starting next week, we'll be here at 6 Eastern for the hour. This was a slight change. It had some scheduling conflicts. 6 Eastern, we will be here. And we're going to be breaking down everything you just heard and more, from software to semis, anything you could want. It's going to be there. And yes, Rock Lab's basically Planet Express from Futurama. That's potential. So there you go. Futurama gave it to you first. All right. I love you all. Stay blessed now. Bye-bye.